I was saying I don't give speeches anymore, and I just had a gentleman here, John, who tells me he's 4 miles from here, just came out to a conference I did on the Jersey Shore, and he knows this. So what I just thought I'd do is spend a few minutes giving you my thoughts and then open it up for questions, comments, and constructive criticism. Notice I said constructive criticism, so just keep that in mind. I took in a good part of the panel at lunch, and for the most part, many of the things I heard Mickey Folk talk about the industry I think was correct, and I'll get to that, but I'd first rather just spend a few minutes on an overall assessment. Important to note, there's 3 main things I do. I write a financial blog. How many people read the blog here? So I have an understanding. Okay, fair amount, thank you. I write a blog. I'm a hired gun for junior resource companies. I have a Christian-based insurance and estate planning company in New Jersey that mostly services professional athletes. I was a diehard Met and Jet fan, and my work is exclusively with the Yankees and the Giants. So God has a sense of humor, He really does. And then third, I'm involved in Christian sports ministry, Fellowship of Christian Athletes and Athletes in Action, and that's how I spend most of my time. What I'm going to talk about when we get to the junior market is something that people don't like to hear. They certainly don't like to hear on Wall Street, but we are gambling. And so we can't use the word gambling because to suggest people should gamble would be the same as saying we should go down to a casino or a racetrack. And as a horse owner, I can tell you the only person that makes money at the racetrack is a veterinarian. But they created a word called speculating. And speculating and gambling in Peter Grandich's book are both the same. So when we give ideas and thoughts, we're speculating / gambling. The second thing is, there was a great newsletter writer, the greatest I ever known. He went back to the Lord several years ago, but he was as honorable and as good as they come, and some of the older folks that might have watched the old days of FNN before there was CNBC may remember his name was Kennedy Gambich. And Kennedy had a saying, and he used to say that those of us who live by the crystal ball over time learn to eat a lot of broken glass. And what he was really saying is none of us, or at least I speak for myself, none of us know the future. We may make a good educated guess because we spend a little bit more time at it than you, but we're all guessing. And sometimes it feels, more times than not, that we're better off throwing a dart at the Wall Street Journal than listening to people like me. But every once in a while, we get lucky, and on Wall Street, if your last good call was a good one, you can live off it a long time. I don't handle anybody's money anymore, so these observations are just my own. I would suggest that you don't run out and treat them as gospel. The only gospels that I entrust are the 4 that are in the Bible, but I would suggest that after 30 years of experience, that perhaps there may be a little bit more of an inkling or 2 that I may have that others don't. At least that's what I try to tell my wife to believe, so she keeps allowing me to invest in the market. And she's not in the room right now, so that's a good thing too. The U.S. stock market, in my opinion, and readers know this, I actually believe it began a secular bear market back in September 2007. I don't know how many in the readers here go back to me that far. It was then that I, only for the second time ever in my history, did I ever suggest people actually short the market. And I wrote that down to March of 2009, when I then felt that we would have the greatest bear market rally we would ever witness. And my latest thoughts, and it remains my thoughts, is that we're in an eye of a storm. And I know storms here are tornadoes, you don't get hurricanes in this part, but if you've ever been in a hurricane, there's the first part, then the eye comes over and it appears everything is back to normal, but then the second part of the storm comes, and most times it's the worst part of the storm. That's where I believe we are as a nation, economically, socially, politically, and spiritually. What has prevented us to get into the second part of the storm, but that storm is at the shoreline now, has been the flood of liquidity, the creation of money. We all know the story. We're not going to banter about it, but literally trillions of new dollars have been created for arguments that they're going to argue in the political contest between now and November whether it was justifiably good or not. But because of that, much of that liquidity found its way to the investment world. And that's really been the underpinning to the stock market. You know, my argument about most people on Wall Street, and I don't mean to offend others that may be here, but and I may be included in other people's mind in this, is that if you toss the typical person from Wall Street off the top of the Empire State Building, they would say the same thing all the way down. So far, so good. And there's a tendency to be seeing the cup half full most, if not all, the time. And so I don't expect ever to turn on CNBC or what have you and expect to see the lion's share of those folks talking about the cup half empty. Now, at the same time, I don't include myself in what would be categorized as a gold bug camp. I don't forever think the world is coming to an end. I haven't been forever touting gold, but I do think, and we'll get to that in a moment, that that is a more worthy place. But I do think there is enough liquidity and enough time left that we can limp to a new marginal high in the Dow between now and the election, or shortly after the election, depending on who wins. But it is not a rally that I would suggest that one would want to be investing in, but divesting in, moving out versus moving in. We are at a point of no return. And in a few days, I'm going to put it up on my blog, a video that a retired CPA made that I think explains it all in 5 minutes. I've tried to tell friends, readers, family members, what have you, that it's very simple to understand where we're at. The United States can no longer service its debt. When you take away our obligations and what we take in as income, we don't produce enough cash flow to pay the interest, let alone pay back part or all the principal. That's just a fact of life. We can banter about it. We can talk about all the possibilities that things can happen and go wrong, but it's only a question of when, not if, in my book. And we're getting a preview of what that may be like in Europe right now. What's unfolding in Europe, in Greece in the forefront, soon to be Spain and others, is what's going to transpire in America. It's going to get to a point where the country can no longer borrow at adequate rates and adequate dollars, has to cut back tremendously, and the people are going to be up in arms saying, we don't want that. And that's what's going to unfold here. I don't know what date. I don't know whether it will begin in Chicago or New Jersey or California, the People's Republic of California. Nobody from California, huh? Okay. But the bottom line is it's coming. And so people then say to me, okay, well, you know, I've been asked in a couple interviews while in Chicago here, how do you fix the problem? Well, my readers know I've picked an industry not because they're deserving to be the poster child, but they are the poster child of what's wrong with America, and that's the public storage industry. People say, well, why do you say that? And I say, well, my parents and grandparents, I'm 56, so you can imagine how old my parents were and grandparents, how many years ago I'd be speaking about. They had much smaller homes if they had a home, and they had no need for public storage. And yet here we are today, and I saw it all along on the major roads that I traveled to here in Aurora, new and more public storage facilities opening. America has too much stuff. I mean, you can banter about and talk about all the other things, but my opinion is we won't be on the road to recovery until we're closing public storage facilities versus opening them. And much of that stuff America has is borrowed. We don't own it outright. So that is kind of the picture that I have, and one of the reasons why I don't like the U.S. equity market. But I also think it's a mistake, and again, I want to caution you, I don't handle anybody's, don't do portfolio management anymore. But when I do get an opportunity to look at people's portfolios, whether south of the border and north of the border, those that do have exposure to general equities, not including metals and mining, still are way overweighted in American-based companies. Now, I'm here to tell you, and I believe if it's not proven out yet, it will be, America is no longer the economic engine that pulls the world around. It went east. And so to think that need to be where greatest growth is in America, and that's where most of your equity ownership is going to be, because remember what it is, it's part ownership of businesses. It's a mistake to be overweighted in the U.S. and underweighted elsewhere, particularly emerging markets. Now, I know there's a great debate, and there was a gentleman I've been told that debated about China and the slowdown and all. There's no question they're going through a slowdown compared to where they were. But they're still going to be, very soon, replace the United States as the #1 economic power. And if you miss the China run, well, there's another opportunity to get on board, because there's a country about 15 years behind it, and it's called India. And so where you're going to see more and more of the growth and opportunities to be successful as part owners in businesses is not in North America, but elsewhere. And so I just like to put that out there, even though, again, like I said, I don't do individual investments, but that's where I would look. Now, when we go to the bond market, it's very simple, and my readers know this. And I've said this now for several months. U.S. bonds, whether they're treasuries, corporates, or even municipals, will be the worst investment anybody can make for at least a decade. And here's why I say it. Unlike a stock, which can go up in value a lot, many times more the price you paid for it based on potential success, basically a bond is either going to pay off when it matures or not. Right now, to lend money for, say, 10 years, it's around 2%. And in more corporate bonds, you may get 3 or 4%. And as you go out the curve, it gets a little bit higher, maybe up at 4, 5, or even 6. The problem I have with a 10-year Treasury note at 2% is I know, no matter what my government's telling me, that inflation is at least more than that. So in a bond, I don't have the luxury of, if it makes a new discovery or it increases sales and somebody's willing to pay me more, it's only going to go up in value if interest rates go lower in the interim while I hold it, or it's going to pay me or not pay me. So it's a horrible investment, in my opinion, to make. And I see some young people in the audience, and I understand seniors, I live in a 55 and over community, are very dependent on income, but it's a terrible thing to first start invest with now. And while I missed so far an opportunity to short it, I still hope that I may get that chance because we may get another quantitative easing. There'll be one more big rally in the bonds, and if that happens, that's when I will hopefully get short. Now, it would be amiss if I didn't speak at this conference a little bit about the metals. And again, I want to caution you, I'm not a gold bug. While I consider this the mother of all bull markets, and both Big Al and I will not live long enough to see the next giant bull market in metals, we're living in the best one ever right now. Now, I know I get a little bit of emails from people from here because I have opened my big mouth on occasion about one or two naysayers that constantly receive media attention despite her horrific, horrible record. And I'm not here to debate them or even bring up their name, but I will tell you this, and I stress this in every resource conference I go to. Wall Street and much of the media that follow it hates gold. Is never going to like gold, because to like gold would be to suggest that what they do make their living off, financial assets, stocks and bonds, will not do well. And that's just a simple fact, and it isn't going to change. So you can never expect the household names of institutions and what have you to get up and say, we love gold, and we think you should mortgage your house and yada, 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 as they may at times on stocks and bonds. The media also recognizes it makes its living off of those people, and therefore is not going to throw them many hardballs about, well, why don't you like this thing gold, even though it's for 10 years outperformed such and such, such and such. Then there's just gold haters. And, you know, I take on one in particular because to be a representative of a company that makes supposedly its living selling to its clients gold and silver, and to be always bashing it doesn't make sense. I still to this day can't understand why. But that's what you need to deal with. So if you're going to expect to turn on your general news or talk to the typical investor and hear positive things about gold and silver, it won't happen. Now, again, I want to point out, my reasons for bullishness is not because I'm hoping that the end of the world comes close. I've got my log cabin in West Virginia. I have my dry food and guns. And I have these gold coins that are somehow going to protect me while the rest of the world is going to hell in a handbasket. Let me just tell you something. If gold has to rise because those events have unfolded and we need to live with that, even if you survive that first go around and you still have your gold and there is still some bread to buy and all, whoever survived that doesn't have gold will band together to come and take your gold. So all that nonsense and all that harsh stuff and dry food and stuff, I just don't buy into that. Not because of my spiritual belief, but because it doesn't make any sense, because even if you do survive it, the masses will come and take it from you. That's just the natural humanness of human nature. I do think, however, that gold is a worthy investment. And when we say investment, and there seemed to be a little debate during the panel, because Al Corlin spoke about silver being an investment for him, yes, it's something that I think you can make capital appreciation in, that you can buy it at one price and sell it for another. But I also think Al Corlin made sense again when he talked about that I also own it for preservation of capital, because I don't entrust what my paper's in. Now, my readers know it was several years ago when the Canadian dollar was under 80 cents to the dollar that I moved over 90% of my wealth out of U.S. dollars and into Canadian dollars, and that still exists outside of my home, and a small amount of cash relative to what sits in my Canadian brokerage firms. Most of my money is in Canadian dollars. Canada, the place that we used to make fun of, and I still do from time to time, one or two of their hockey teams, but they are in a much better position. Now, they're not in a free position. They are not just going to be happy-go-lucky. They have some of the problems we have, but nothing to the degree that we are. And it's one of only 2 or 3 currencies that I would place money in. The other would be the Australian dollar. And one of the reasons I like Canada, besides being much like us in many ways, is Canada is self-contained. It can take care of itself. It can feed itself. It can give itself water, and it can give itself energy. And we stupidly here in America, and I'm not talking about us individually, have the greatest relationship we could possibly have with any country. They want to provide us with a whole excess, including a pipeline, and what are we doing? We're saying, no thanks, that's okay, thank you. It's a very poor energy policy, but I'm not here to debate politics. But so to sum up there, I think gold and silver, and I'll take questions and answers, we'll get more into it, but I think it's a worthy investment, but I also think it's a way to preserve one's capital. The U.S. dollar, obviously, it would be insanity if I'm a roaring bull on gold to be bullish on the U.S. dollar. I believe it's terminally ill. And I say this to the bulls, and just so you know, 4 weeks ago, a record amount since 1999 were the bullish positions taken in the U.S. dollar on the commodity exchange. We haven't seen these many bulls in over 10 years. And yet, where has the U.S. dollar index gone? It's not only gone nowhere as fast, it's starting to roll over. And I believe we're going to see in the next few weeks a lot of stale bull selling. These people are going to realize, despite all the bad news in Europe that was supposed to drive it, the U.S. economy was supposed to rebound. It isn't happening. They're going to start to move out of their positions. And I think that's going to coincide with a rally in gold. But I just don't like the dollar. I told you a lot of reasons. There are a lot more, and why I choose the Canadian dollar. And lastly, oil and natural gas. I would probably tell you that oil is $30 to $35 overpriced, which it probably is based on real supply and demand. But there's one issue out there that's not going away. It's probably going to move to the forefront very soon, which has not only kept the oil price higher, but could even drive it even much higher, and that's the potential of a serious conflict in the Middle East. And I think people who are in the business cannot afford to take that chance, especially as it looks to be more and more towards some sort of military conflict. And if and when that occurs, we can start adding, $10, $20, $50 to the price. Now I want to talk about something I'm certain many of you want. It may or may not make the exhibitors that are exhibiting here. One of them is my client, and I'll speak about them shortly. But I want to take some time to talk about this industry we call the junior resource market. I said earlier that we are gambling. We're not speculating, we're gambling. And in any gambling, you're supposed to be prepared mentally and financially to lose part of all your capital. Now imagine, if you will, I don't know where the nearest casino is relative to here, but if I said, come on, let's go down to the casino and we'll start going down there as a group over the next year or two. Oh, and by the way, only 3% of the people will end up making money. Come on, who's with me? Not many will go. Well, as hard as I'm certain, as dedicated as there were a series of exhibitors here among the list of my own clients, with all their good intentions and efforts, small minority will achieve and go the whole 9 yards. That doesn't mean there was any dishonesty, and there is in this business, unfortunately. It doesn't mean that there was miscues. It's just the way of the world. For everyone that gets totally successful, 8 or 9 don't. Now, normally, no one would want to be involved in any of that, particularly if you buy it and just hold it throughout its duration. What used to be pretty good news in our business was that they would still be able to rise sometimes multiples from what you may have purchased it on the hope of stuff happening. And a lot of that is dissipated, and it's dissipated for reasons that, for whatever reasons, most in the business have not spoken about. A few weeks ago, I wrote about it, and I knew I hit a core because I probably got more emails about it from people in the industry, the media, than anything I've said or did in years. And I wrote a piece that many will remember that I pointed out some of the factors that I thought were negatively impacting the junior resource market. Now understand this. Not only do I make my living from this, so it would be advantageous to paint the cup half full versus half empty, but my absolute, and she's still not in the room so I can say it, my lungs are in these things, and in at higher prices, okay? So this is not somebody that was wise enough to be totally in cash and suddenly Monday morning I'm going to work. These things were 50% higher and I was already a big buyer. But one of the realizations you have to be, and one of the biggest crime in investing is not being wrong, it's staying wrong. So I'm constantly analyzing and trying to justify if my position is still correct. And these are the things I think we have to accept as change in our business, whether we make a living in it or we invest in it or both. The first is the biggest change, and this conference is an example of it. I was telling Eric that I was last out here with his dad in the 1990s when I was, doing this conference. And when you went to a conference like this, or the New York Gold Show, or the San Francisco Gold Show, or Toronto, or Vancouver, there were hundreds of Richard Redez's. The industry was full of financial people buying and selling stocks, getting behind in positions, living off commissions, and building books of business around it. So when Rich Redez came interested in your company, you got his 100 to 500 clients. And there were hundreds, if not thousands, of brokers doing that. So at these shows, there were, God, I can remember some of the names. Many of them have passed away since then. That's no longer the case, particularly in the U.S. and changing rapidly in Canada as well. Most financial people, outside of Richard and some others, are asset gatherers. The industry's gone away from commission-driven business. It gathers assets. It says, give us this money. We turn it over to a third-party money manager. They manage it, and we charge you one set fee. Most, if not all, those managers are not buying junior resource stocks. Even if they wanted to, their compliance or regulatory is stopping them. So an audience that was available 10 or 15 years ago, even though metal prices themselves are up multiples from them, are no longer active in this business as they were back then. The second was a good news, bad news story. The good news was the creation of the 43-101 rule. It's important for you to understand that. If you don't and you're involved in juniors, you should learn about it. It was first the legitimization of how companies go about and figure out what assets they have, how do you report it, and how do you categorize it. And before that, it was the wild, wild west. The bad news to that is it basically eliminated publicity, promotion, markability. What one could say about the potential of their business before 43-101 and what they can say now is two different worlds. So we used to see companies rise exponentially on drill results because basically you were almost free to say, well, we think this is the greatest thing since Nirvana. Now you can't even mention Nirvana. And so that has been something that's been removed from the market. I mentioned compliance and regulatory. Here in the U.S., and it's very hard for Canadian companies when I speak to them to grasp that, most American brokers cannot even take unsolicited orders on something that isn't trading on the NASDAQ or the New York Stock Exchange down here. Even though the Toronto Stock Exchange is the fourth biggest stock exchange in the world, if it just trades up there, and even if it's on a bulletin board here, most American financial people cannot even take an unsolicited order now. It's another handicap to companies trying to publicize their wares. I was telling some gentlemen before, the other problem was the 4-month hold. Remember, juniors are burning matches, as Doug Casey likes to say. They have to constantly raise money. They haven't found an asset yet that they can develop and make money off of cash flow or selling it. So they have to continuously raise money to expand their resources and look for new projects. The problem was, most of that is done through something called a private placement. Private placements used to be 2-year holds, then they were 1-year hold, and then they went to only 4 months. And after 4 months, they become free trading stock, just as if you bought it in the market today. The problem with that is most companies don't move up the corporate ladder, advancing their story enough within 4 months to justify either a new group, a different type coming in, or a larger interest. So one of the other things juniors have to face is a constant battle of paper coming back to the market. The other problem with that is there's a new game that the investment bankers in Canada are playing. It's called flip the warrant. Businesses slow down. So what they do is if the stock is on either side of unchanged, they turn to the institutional investors, say, listen, I can get you out either 2% gain or 2% loss. Keep the warrant. You have no further risk. If it goes up and does well, you got it. And by the way, I got another deal. And so that is another supply that's coming into the market. Discount brokerage. Now, many of you won't raise your hands, But those that were investing 25 years ago, when you bought 5,000 shares of an 80-cent stock and your commission was $2.70 or $3.80, you didn't sell it when it went up 3 cents or 4 cents. But now that you can buy it and pay $9.99 and on a 3-cent move make 12%, you're out. That's another part of the junior market that's changed from 10 or 15 years ago that's made it more difficult despite the rises. There's a couple other things like country risk. 20 years ago, you can put your head on the pillow and if there was only 5 places you were in the world, maybe you didn't sleep that comfortably. Now there's only 5 places that you do sleep comfortably because so much is happening politically, environmentally, and what have you. So the junior resource game has become much tougher despite the increases in metal prices. The last problem that they have, and this is the one I feel most for them because it's part of my business, is 1,000 to 1,500 juniors. There's probably a few dozen at best points of interest, people who can bring interest to them, whether they're newsletter writers, analysts, whatever you want to call them. And they're all competing to get their attention. And I don't care what they say, and I don't mean to be disrespectful to any other newsletter writer here and all, but I don't know of anyone who is just making a living selling a newsletter on junior resource stocks. Even my great friend and the most honest guy I ever met in his business, Jay Taylor, has moved towards other ways of producing income, fully disclosed, of course, and that's why I consider him a friend. It's a what's in it for me. So it's very hard for any one company, including my own out there, with all these things against them, working against them. So when you're about in our Q&A to get mad and get upset, because like I just said before, if I had 20 companies and I told you only 2 or 3% of them are going to be succeeding, in a year or two from now, 16 of you are going to be mad at me because 16 didn't work out, no matter how positive they were. But I believe if you're honest with people and you give them a real assessment of what they're dealing with, and then we can identify both the mental and financial anguish that comes with it, and we're still in the position, then these things are really good. And they're really good now because I agree with the other part, and I believe it was a young lady and a gentleman I heard, I was way in the back, and at my age I couldn't even see him, but who spoke about this being a great time. It is. It really is. Because this is where we're at, in my opinion. We're either the new buggy whips of the 21st century, or this is a great buying opportunity. And let me explain. Imagine it's 1910, and this is a room full of people that were investing in all the great buggy whip companies that existed in America, because there was many. There was very few cars. Cars were just coming along, and we invested in them. And 20 years later, no one needed a buggy whip. It appears that the market has begun to price many juniors as if they're buggy whips. They're never going to exist again. We're never going to need metals. Somehow these majors are going to find all this gold on their own, which they never did. They always end up depending on juniors to do it. Or we're pretty well at a low level because now we're seeing juniors sell at nearly all their cash value, if not over. They have more cash than the total market cap. So I'm prejudiced. I'm speaking from a bias, potential conflict of interest. I don't think it's the buggy whip time. And one of the things, and then I'll just talk about a couple companies and open the question, is that makes me realize it is that Barrick Gold, kind of like a bellwether among major producers, is selling at less than a market multiple. And anybody goes back 20, 30 years, you remember mining companies, producers sold at 30, 40, 50, 60 PEs, many times 3 to 4 times the market multiple. Now we have Barrick and some others selling at market multiples or below. And that would then argue that not only have they come cheap, but if we're going to think that there's going to be no more need for gold, then don't even buy the producers either. Because what will matter to find more gold if no one's interested in it, when nothing is further from the truth in terms of demand. All right, let me just mention a couple companies, and then we'll take the remaining time for Q&A. It would be amiss if I didn't speak about one here. I own it. It's a client. It's a conflict of interest potential, but it is a success story. And since it's being recorded, it will be shown, and whether or not the guy I'm going to mention will find this funny or not, it is true, and so I need to say it. In my home, if my wife was here, she would tell you we have 3 statues. We have Jesus, we have the Blessed Mother, and we have Mark Morabito. Now, Mark Morabito is one of the founding principals and still chairman, I believe, of Crosshair Energy that is exhibiting here. He's also the principal of 4 or 5 other public companies, all of which I work for and all of which I own in a very big way. He is if I could clone him, which I don't believe in cloning, but I would if I could, because he would make our industry that much better. He's the hardest working, most successful person I dealt with in the business, and he happens to be one of the key people behind Crosshair Energy. I like Crosshair Energy and other uranium because I believe, as always, markets overreact. It was a terrible accident in Japan, but it really, thankfully, didn't change the prospects for uranium. The world is still going to need more energy. We all want something to be able to plug in, and we're going to need more electric and what have you. And no matter what politicians said right after that to look good, the recognition is that uranium is going to be a key part of providing the energy that the growing world needs. So anything in uranium I'm interested. I have what's called a tracking list. They're not clients of mine. They're companies that I find attractive. I keep my readers on that, and it's seriously overweighted in uranium. I really think it's a good place, and if there's still time to visit, take a hard look at Crosshair. Because we're running short on time, if people want, during the question and answers, I'll speak about the others. I don't want this to become a commercial for Pete Grandich. So what I think I'll do is there a mic here? If not, just I think we're small enough to call out the questions, and I'll take it. And remember, only constructive criticism will be accepted.
Any questions? Yeah.
Yes, sir.
About Northern Dynasty Mineral, do you still have some?
I still own it. It's my albatross. It's the thing that at night when I'm just about to hit the pillow and fall asleep, I hear those 3 letters, and it makes me go back out and eat something and not sleep for about 2 hours. Northern Dynasty Minerals is a client of mine, is a company that I own stock. I don't have as much as I once owned because eventually, like others, I use my money to buy other things. Hopefully I'm going to do better in that. It has fought a unfair environmental argument because they haven't even gone for their first permit. But that environmental argument has gotten big enough to spook most investors into owning it. It's the world's largest undeveloped copper-gold millennium deposit. The company is anticipating it will finally be coming to market this year with its plan on how to mine. If and when it gets acceptance, which many people still feel it will be because it's one of the more friendly mining jurisdictions in the world, Alaska, then it could be worth multiples of what it is. But at this point, it just can't generate any interest. And quite frankly, I'm tired of speaking about it because all I do is getting beaten up, and you only get beaten up so much and then you move on. It's just a fact of life. I wish I had something better to say. I'm sorry at this point, but I wouldn't give up on it in the sense that it really hasn't demonstrated that it can't go forward. But the environmental camp has done a great job in convincing most people it won't move forward. Yes. Yes, sir.
URG. Symbol URG.
Uranium. I can almost toss a dart at uranium deals. Like I said, I'm very bullish on them. I don't have any specific thing to say on it other than I would own a uranium stock before I would own just about any other one type of metal stock. That's the best I can say. Yes, sir.
Peter, you talked about being in the eye of the storm. I was wondering, from a spiritual perspective, what would you specifically recommend to people in general, how they prepare for the other side of the storm spiritually?
Okay, the question, if you didn't hear in the back, is since I said we're in the eye of a storm and I speak spiritually, would I share a few moments about how I'd approach it spiritually? I'm still a work in progress, which I think we all are. But one of the things that I've concluded for me, and I just speak for myself, is I find great comfort in Scripture. It's an amazing thing about the book. And now we could argue the book is it's only one of 3 things. It's a bunch of crap. It is the Word of God, or it's something yet we don't know quite what it's about. But whoever the author or authors were, it's a phenomenal thing that lasted over a few thousand years and has been more accurate than any financial book that's been then written by anybody. And in it, the second most talked about topic is matters of finance and all. And real interesting, and this is to your point, it is stressed one thing more than anything else when it comes to matters of finance. It hates debt. There's not a positive word about it. There's tremendous amount of caution about it and what it does. So from a spiritual standpoint, what I tell people when they say, well, Mr. Grandich, what can I do, is work your way out of debt. I've watched people move away from large sums debt. You literally have to start over but not have that debt burden, and they feel born again. Because it is a burden that goes beyond finances. Marriage counselors will tell you, was 1 or 2 people divorce. The number 1 topic that leads to divorce is matters of money. So I would tell you my answer would be is moving away from debt versus towards it would be not only a secular good thing to do, but a good spiritual one. Yes, sir.
Do you have any opinions on that Pan Am Gold Exchange?
Don't know. The Pan Am,
Pan Asia Gold Exchange, where you can, I guess what's going to happen is that China's going to have this exchange where you can actually
okay.
buy a physical 10-ounce.
Right. This is a good question. The question is more about an exchange that's taking place in China. Understand what's unfolding in China in terms of gold. Here in the U.S., Canada, it's different, but we have what's called a 401k. It was a program that the government basically helped set up because it wanted to see its citizens save, but they wanted to move away from being responsible for them to save, so they created the 401k. In China, they created purchasing gold as a savings program. They're not having them buy paper assets. They're not having them invest in their own stock market. They're buying gold. It's because it's culturally correct for them in their history, but also they recognize gold as money. And they feel much safer with that than having them buy paper assets. So I think anything where we continuously see, we just saw news now that China has decided, even if this rule stays in effect, that it's going to continue to purchase its oil from Iran but use gold instead of. I think we're going to continue to see more and more gold become a standard in lieu of the U.S. dollar. Now, late Friday, and you'd have to be really into this, minute to minute, there were some stories circulating that the guy that's looks to lead to upset in France, the socialist candidate, is going to call for a change in the euro and try to take some of the strength away from Germany and give it more to the other countries, which may actually sound crazy, but strengthen the euro versus making it decline. If that story starts to grab and make traction, that could hurt the dollar in a big way, and that would help gold. But in terms of answer your question is, I don't know particulars of that exchange, but I think anywhere where people are saving in gold versus paper money, I think they're going to do okay. Somebody in the back? Yes, sir.
You don't have the opportunity of trying to speculate out of the 1 out of 10 that may win or not win. Would you go back traditional to invest in either mutual funds or ETFs that deal directly with financial resources?
Sure. A good question. I'll tell you what. I'll give you my book. I'll give you my largest personal holdings of today, and that can change. Monday, I could decide to sell them all. So I don't. This is just where it is today. I would say my largest holding, I'm trying to remember it alphabetically. One is a company called Oleron that Mark Morabito heads. It's an iron ore play in Canada. It trades down here now in the New York. They just had the Chinese buy 19.9% and did an offtake agreement. They paid $3.52 just 2 weeks ago. The stock is $3. So either one or two things are. The Chinese were dumb, or the people that sold it down to $3 were. I'm going with the Chinese. So that's one. Up in that area, too, a company that may have a much bigger deposit, but still has a long way to go to prove it than Alderon and iron ore play is CapEx Ventures. These are all on the blog. You can find them on the blog. A very large holding of mine is Geologic Exploration, GIX. They just have a deposit that's, every time we drill it, we just find more and more upside, and the market is valuing it at maybe 1/10 of what it should be valued at. It's trading like at 25 cents. I really think it should be close to $1. Sunridge Gold. In a very short order, the company should be putting out an updated resource that I think will show that the market cap is not even worth its net asset value. And anytime you can buy any company selling below its net asset value, that its market cap is less than that, I think you're doing a good thing. And I guess Spanish Mountain Gold. And I guess to answer your question, there are ways that would be much safer versus these individuals. There's GDX. There are some ETFs. Now, there's a big debate in the resource market about ETFs, particularly the gold ETFs versus owning gold itself. My argument is, unless you're talking about a very large sum of money, unless you're talking about that you have all those fears why you need cabins and guns and dry food, the ETFs make sense. They offer tremendous liquidity. There's almost no cost to acquire them if you go through a discount broker. You can sell them during the day. You don't have to wait for a fund at the end of the day and get the price. So I'm a fairly big believer of ETFs, either for the physical bullion or those that hold mining shares, whether they're producers or going down the food chain to juniors. A few more questions? Let me just see. Yes, sir, and then I'll come back to you. Yes? Orman exclamation, I forgot to mention that. I'm sorry, that is a large holding of mine, Orman. Orman is a company that in December announced that it was in discussions potentially that could lead for it being acquired or merged. It reinforced those words a few days ago, noting that it actually declared who its investment banker has been all along. It's a kind of a no-brainer in this sense. I believe whether they get a takeover bidder or not, the stock is worth more than what its current price is. So if they do and they're successful, then it's going to go out to a premium where it is right now. If they have to develop this thing on their own, it's still going to be worth more where it is now. So Orman would be a company, obviously I own a lot, that I would look at. Have time for a couple more questions? Yes. Let me just, somebody has, and then we still do. First you, sir, and then you. You, sir? Yes.
Yeah, last Sunday night, Jim Willie came out and said that this big banker contacts in Germany said that they're going to force France out of the euro and the other club med members. Have you heard anything similar, Peter?
Well, there's a lot of that banter. Like I said, late Friday there was legitimate discussion now that this socialist candidate in France seems that it could actually win the presidency. What I would just say is this. If you were a dollar holder, a U.S. dollar holder, in the last 6 months, all the news we saw in Europe, all the news was supposedly of an economic recovery in the U.S. that was going to drive interest rates higher, and it hasn't worked. It looks to me that the U.S. dollar bet was the wrong bet. If we get something in Europe that actually somehow creates or makes Europe as a whole look better, whether it's a new euro, a two-tier euro, there's been all these discussions, and I don't think anyone knows yet where it's going to go. The one result in all of this is I don't think the dollar benefits. So that's why we continue to avoid the dollar. Yes, sir, in the back.
Yeah, a couple of years ago, a big area of play was the Yukon, the Yukon gold rush. And of course, since the downturn economically, a lot of those companies have just been buried. Talk a little bit about the Yukon way of business.
I had my exposure in it limited to a company that was acquired, SilverQuest. I've just met with a gentleman outside because I, like you, realized that it's really come 180 degrees. At this time last year or this time the year before, everybody in this market couldn't wait for the drilling to start, and we were all rah-rah, and now it looks like people just don't even want to talk about it anymore. Many of these stocks have lost 80-90% of their value. I haven't done enough research on my own to look at which ones may be. There's names that look like they're going to exist, get by, Caminex, a couple others like that. But I am looking back myself again in that area because the story that made us excited 2 years ago hasn't gone away. The interest in it might have, but the actual story and the geological argument to be there is still very much in play, in my opinion. A few more questions? Yes, sir.
In Canada, we have a system of financial called flow. Do you offer up an opinion? Is that
the gentleman brings up, and it is an important part in the junior markets called flow-through funding. I wish we had things like this in America. We used to. There was tax breaks when we used to invest. Even in the horse racing business, you could put money in. You got an 80% tax write-off, so if it went bad, you got a write-off. In Canada, companies can raise money in a flow-through manner where the money has to be spent exploring and developing within that province or within Canada where the money is raised. The person that buys that flow-through share, and I don't know what the exact number is, but they get a very advantageous tax break, 80-90%. So even if the stock loses 100%, they really only lost 10. And if they get to sell it for even its price or higher, they actually made a lot of money. There are more mining-friendly provinces than others in Canada, but flow-through funding, while it's not as big as it was, I think that's because of the economy, is an important lifeline, and realistically why many mining companies are focusing back in Canada, because it's an avenue of finance that you can't get if you're exploring in South America or Nevada or somewhere else. A couple more questions. Yes, sir, and then we'll take yours and we'll conclude that. Yes, sir.
majors that are paying like 3%, those who are paying like 4.9. I see limited downside risk for these companies from certain campaign interest anywhere else.
Well, let me talk about this. I'm going to take a couple minutes. This is important because I see many people like myself here either losing hair or it's shaded mostly gray. And I'm going to explain to you how I got to that by your question. I live in a 55 and older community of 300 homes, and they did a story about me in their local paper, so now people are knocking on my door and asking questions, particularly since I don't sell anything anymore, so they really feel they're going to get objective news. And what I found throughout the senior community down in New Jersey, and I think it's representative throughout America, is they got hurt chasing yield. And this is how I know it. 10 years ago, when I was a financial advisor and getting paid, we did financial plans, and those plans were done in a variety of ways, either simple yellow pads or computers that showed all sorts of bells and whistles and graphs. But at the end of the day, people took what they had, you gave them a potential return, a yield, and we reach whatever goal they're trying to reach, retirement, college education, et cetera, et cetera. Well, seniors, for the most part, who, by the way, own 80% plus of the wealth that's left in America, are the single largest voting bloc in America, and there's now more people over 65 than under 18, they lived off yield, which was 6, 8, 10%. It was not hard to find Ginnie Maes or treasuries or things that were fairly safe in yield. And where did those yields go to? They went to 1 or 2%. So they are unfortunately part of the group that got caught in the mortgage situation, which I need to comment on as well before I go. And so they chased yield, and they paid by losing par principal. Then what else happened to the 55 and over community? Well, what was the other thing they were always assured of? I remember as a financial advisor, we telling them all this time, and those that are old enough to remember it. Mr. and Mrs. Jones, the stock market and homes over time go up in value. And we made our plans based on that happening. Well, it's been several years now, and on average, they haven't gone up. Some may be back to even, others are down. And then the last thing the senior had was a triple platinum medical plan called Medicare. Compared to what other people have around the world, trust me, it's a triple super plan. Pay very little, get a lot. That's about to come to an end. So the senior community, single largest voting bloc, controls 80% of the wealth, more of them than under 18, are now going to see the last of the great things they have disappear. They talk about a war of classes, or there's a creation of war classes. That class is being attacked more than any other class. And since they own most of the money and control most of the influence, it'll be very interesting to see how that develops. And so to answer your question is, chasing yield for the sake of yield, even in the mining business, would be a mistake. I wouldn't buy those companies simply because they have a nice yield. I would buy them on this belief that my principal, I'll return it, and the yield should be fairly safe, and that's what I'll gamble because it pays more than putting it in the bank. But I wouldn't buy them just for the sake of yield. And let me close one thing, and I know you had a question, you're going to be the last one. I want to talk about the mortgage thing, because this is my, as much as Northern Dynasty is a pet peeve in a bad way, this is my real thing that I wish if I had one chance to talk to the nation, I would. 5 years ago, we were told as Americans, for those that are Americans here, that due to unfortunate circumstances, these large investment houses lent all sorts of money to different types of people and countries and corporations around the world, and the mortgages are blowing up, and if these institutions blow up, all of us are going to be wiped out, so therefore we have to bail them out, and we had to create a couple $1 trillion to do that. Okay. It came out later that one firm in particular, Goldman Sachs, we're talking of public record here, was accused and shown to have actually be taking the other side of those bets. They literally bet that those mortgages would fail and their customers would lose money. And so I like to change the story a little for the average American who doesn't take the time or understand finances to really appreciate this and say to them, listen, imagine if you would that you learned that GM, Chrysler, and Ford built billions of dollars worth of cars knowing they were going to crash. And by the way, they also bought life insurance on the driver so when they crash, they collect twice. We laugh, but that's exactly what happened. We bailed them out, and where are you 5 years later? They're back at record profits, they're paying out record bonuses, and they're operating just like it never happened. So then I meet people and they tell me, I met a guy in here, oh, I'm trading the market, but I said, good luck. That's the group you're trading against. You got a pea shooter, they have nuclear bombs. You cannot win. And that's the disaster of the last 5 years. That we bailed out a group of people who did not learn from their lesson, who have not gone about and changed their ways, and we're right back where we start, except we owe a few more $1 trillion as a nation. I'll take yours as the last question,
I
sir.
absolutely agree with all your comments, especially the last one. Peter, you actually predicted, as you mentioned at the beginning of your talk, made a call at the top of the general market, the U.S. market, and then a call at the bottom of the U.S. market in 2007, 2009. You mentioned being at the eye of the storm. Maybe you'll peak later this year. Do you see yourself making another call within the next year, possibly, as far as the top of the market for the U.S.?
I will tell you this, and I have hinted to my readers, and those who picked up have already gotten angry, but I'll say it. There may come a time, it may be by this time next year, that I may even be moving out of metals and mining. Because I don't know, it hasn't developed yet, if certain events take place. Now, this is going to separate some people here, and I don't want you to make personal opinions on this, but you're asking me for an honest opinion, I'm going to give it back to you. I believe that based on where we are now, not that I'm a great believer of Romney and he stands for everything I ever wanted, because the guy I would really want it is Ron Paul, because this is why. Let me just tell you why. My wife, we have a friend that we argue about this. See, we're in a fiscal mess. And it don't matter where you stand about whether we should use an army or not, we should do this socially. If we don't fix the fiscal mess, we're not going to be able to do anything else as America. So I felt we needed somebody that understands the fiscal mess. Having said that, for whatever reason, and it has nothing to do with color or beliefs, it's just a fact of life, Obama has demonstrated that his feeling is more towards secularism and socialism. That's what he has decided that he thinks is best. And that's where he certainly has moved his administration towards that. I'm on the other side of the camp. I think that's what's making things worse. So I'm in the fact of, well, I want anybody but him, just as basically how Obama got elected, because everybody was so tired of Bush that it didn't matter really whom else was running at that point in time. So depending on the election in November, I believe right now if Obama gets elected, it accelerates where I think problems are going to be, and I'm probably going to accelerate my move towards that. On the other hand, and I hate words like if, but, perhaps, and maybe, because that's what makes up most of the vocabulary of people who talk on Wall Street, but if Romney wins, and depending on whether the Congress change is more favorable or leans back another way, some of the things may be at least forestalled, or there may be a ray of hope that we don't have now. But I won't know that till November 4th or 5th or 6th. But I will tell you this, no matter who gets in currently that's running, the system is broken. It's not a Republican problem. It's not a Democratic problem. It's a process problem. And until we change the process, until we go back to what the Constitution and the forefathers decided, which needs to start with term limits. That's the first thing we have to do. We can't make it a business. We can't make it you get rich. You know, a congressman goes in, he goes 2 years, he gets health insurance for life. I pay $2,400 a month, you know, as a employed guy and so forth. But to answer your question, there may be changes. A lot of it's going to be political. And then there's one last thing, and I hate to end on a real bad note, but this is a bad note. In my book, and my readers know I've spoken about this for a long time, it's only a question of when, not if, there's a major conflict in the Middle East. We appear to be moving very close to it. We just learned that our government has moved some of its most advanced fighters and all over this past week. It looks like everybody's positioning themselves for a potential conflict. I think it's a Pandora's box. There's a lot of things that aren't planned that are going to happen. We're not going to realize it until we're into it. And I don't know if we're prepared as a nation, or at least as an administration, to stand behind or take sides, so to speak. And that will have immediate impacts. It'll impact the price of oil. It will take whatever fragile economies that were rebounding, send them back into recession. And I don't know what date it is, but in my book there, it's only a question of when, not if. So it's hard to paint a bright picture, but I know one of your follow-up questions will be is, how do you remain bright? I've learned to focus past this life. And as ugly as this life looks, I'm hoping the other one I'm believing in is right. But, you know, when you've bought enough junior resource stocks and you get beaten over the head, sometimes it's tough to have hope. Listen, thank you very much. I'm going to have to run soon, but I'll stay around for a few minutes to answer any other questions.